Hey, everybody out there, Blair Nightingale here. It's time for Stock Talk Thursday. We're coming on here every Thursday. I say this every Thursday. Make sure we got some new folks out there. You know what we're doing. We're coming on here Thursday afternoon, helping you right before the end of the trading week. Of course, we have one more trading session tomorrow, Friday, where the market will be open Central Standard Time from 8:30 until 3 p.m. in the afternoon. That's the time it always is on Texas time. We have another session, but we get close to the end of the week and we want to look at what happened in the market this week. I always want to look at some specific stocks with you, something that's performing really well, something that is underperforming or at least got crushed in the market, and we can learn some things from these stocks. Obviously, we would want to find stocks that are doing very well, and we want to avoid stocks that are not doing very well. Tradeway teaches a system that helps you and me know what should I be trading, why, and how do I protect myself doing that. So you're looking at the stock market right now. This thing, it's worth just taking a second here off the top of the show to recap what's been going on here. 1, 2, 3, 4, 5, 6, 7 days after a 7% correction, meaning the market fell from the high 7%. Okay. It's back up above the previous highs. We're at all-time highs again. So the market itself, not the choice for me today to focus on what is hot, but I got to throw this in the conversation because it certainly is hot. The market is hot. So there have been some great opportunities out there as this thing has been moving up. Definitely at a little bit of a deciding point here as we press into all-time highs. Can they continue to push the market higher? And what do I think is going to make the difference? Well, the difference is going to come from how our news item, which we usually end the program with the major news item. If you've looked at any financial news or have gone to invest or trade a stock and wanted to know, well, what's the news in this stock, you know that the markets are a flood with different sources of news information. And of course, what we try to do for you here on Stock Talk Thursday is help you understand what's the main news item that's really driving the market and what's going to continue to be the only thing, or at least the major thing, that you and I need to pay attention to. And of course, here it's going to be earnings. Okay, we're going to talk about this today, but earnings is the main thing. Wall Street is watching. That doesn't mean every company that's reporting now is crushing on earnings, meaning doing very well. But the main ones, the major ones that Wall Street has been watching over the last couple of days have been doing well. And as that has happened, it has boosted the buying sentiment in the market. This is important for you and I as traders because we want to know what's the main psychological thing that Wall Street is paying attention to. Now, your neighbor won't have any idea what to pay attention to. It'll just be a barrage of news items that Wall Street puts in front of them. But for you and I, when we know, there's basically one, sometimes two major things that Wall Street is really watching, then we can fixate in on that as well. And that is the purpose of really knowing what's that main news item. And at Tradeway, we teach you how to know what that news item is. Of course, here today, I'm giving you what I believe it is and what I can see impacting Wall Street the most this week. And that, of course, is earnings, but specifically earnings overperforming, doing well. Some of these big companies reporting earnings. I do want to let you know earnings is something, if you haven't heard of this yet, it's a company that has to report earnings once every quarter, right? These are publicly traded companies. So they have to make this information known to the public. That means they will set a date once every quarter, 4 times a year, and they'll let us know when that is. You can check something like earningswhispers.com. That's earningswhispers.com to to see what the earnings report, when it's going to be for any publicly traded stock, right? You just go there, type in the ticker, and it will give you the date that they have so that you can watch for that. Let's segue from that and head over to what I think is the not choice not hot choice for this week. And the reason I chose this one is specifically because I just mentioned that earnings is part of the focus right now. So let's take a look at something that I have said on Stock Talk and Market Monday before. We're here at Tradeway. We don't hold stocks over earnings reports. Okay, we don't do that. I actually met a man in Tampa this last weekend, and he was a financial advisor, and his entire way of approaching the market, which is not wrong, by the way, but his entire way of approaching the market is long-term, buying stocks, holding them for a long time. It's not repeatedly buying and selling the stocks for what we call cash flow investing or trading. We're trading the stock. He would hold it. So the idea that not holding over earnings was difficult for him to accept at first, but it is a different skill set, trading versus investing. In the trading world, we don't hold the stock over earnings. And I am going to show you today's example of what is not as a great example of why we don't do that. Okay. So if you look at Snap, okay, here we have a tech company. Okay. Let's zoom out a little bit here and just get kind of an idea of Snap. Now, do you think Snap is doing pretty well? Snap's doing pretty well, right? That's a hot stock. Now, that's over a long period of time. Remember that we're looking at trading the stock. Now, we may have a position where we buy and hold some shares of a stock, and we also are trading it. There may be some scenarios where we would do that. But what I'm referring to specifically right now is that shorter term, what we call swing trading, about 2 to 3 days to 2 to 3 weeks. And what I see on the screen right here is a rolling stock, right? The stock is going sideways between approximately $71.50, okay, and $78. And what happens? It comes down to the bottom and it moves back to the top. Down to the bottom, back to the top. Down to the bottom, back to the top. This time, it gets even further right, but then it eventually corrects itself, gets back into the bottom, moves back to the top. And now here we are in the middle, okay? Some of these plays might have taken a little bit longer because they've gone up and then they hesitated, but then they eventually made it to the top, made it to the bottom. That's a rolling stock. It's just rolling sideways, like rolling hills, okay? That's a rolling stock. So you look at this and you go, oh, it's got a pattern, right? It's got a pattern. And for some of us, if we know how to trade options, we can play a pattern like this not only on the way up, but also on the way down, right? We can do what we call double dipping on this pattern. That's something we have the potential to do if we know how to trade options. Otherwise, we're trading stocks, we're buying at support, selling at resistance. That's what we want to do. And this pattern gives us a very clear-cut way to do that. But what's one of the problems I see right now? If we've done anything on this right now, we've got earnings. Earnings was today, okay? Earnings was after the bell, we would say, after the market closed today. They reported their earnings and they missed on earnings, okay? They missed on earnings. And if you notice over here, here's where we closed today. See on the bottom right-hand side of the screen, down not quite 1%. But after hours, when they reported, it's now down 25%, right? Just shy of 25%. So you can see this line right here where it says post 57.50. So losing a massive amount of their value. Now, it may recover. It may retain that. It may continue to drop tomorrow. We'll have to watch in the morning to see what it does. But if you and I were in this position, whether we were trading options or stocks here, this would be a significant risk where quite a large portion of our money would be gone from that trade. Okay. And again, remember, we're not approaching this as a long-term buy and hold. When stocks move like this for a long-term buy and hold position, typically all we need to do is just hold on to the stock. We continue to wait and hold on to the stock because we plan to hold it for a long time and we have a reason why we would want to hold it for a long time. Trading is different, right? If I had held the stock from here to here, well, what would I have made in all that time? Potentially about $72 to where it is now, $75. That's $3 a share. But what if I had the skill sets to trade the stock? And I could get in here and get out here and get in here and get out here and so on, right? If I could repeatedly do that, and this is not even looking at the double dipping, 1, 2, 3, 4 trades on there, right? Theoretically, if I had done them all, now likely I wouldn't catch that first bounce. I'd be waiting for a pattern to actually form. So let's say you didn't do that first one. 1, 2, 3, and it could still potentially come down to support and do it again, right? That gives us the opportunity to do something in that time frame that buying and holding cannot do. That's the skill set that we teach you. Holding over earnings, though, you might just wipe out everything that you've accomplished doing that. It's a gamble. Somebody says, Blair, it could have gone up. Maybe it's going to go up 25%. Wouldn't that be awesome? Well, it might, and that has happened, but you don't know, right? We just don't know. And as I always say, trading is never guessing, gambling. You're going for it. And in this case, you would definitely be guessing. You'd definitely be gambling, and you would have to go for it to trade over earnings. So Snap, not looking too hot tonight as it missed on earnings, down nearly 25% after the bell. Interesting to see where that goes tomorrow morning. So that said, also just want to take a quick pause in here and say hello to our friends out there. Marcelo, I can see you there. He says, hello, everyone. I am ready to learn. Excellent. That's exactly what I want to hear. Danny says, sorry I'm late. No worries. Better late than never, my friend. You're here, and we are rocking and rolling. If you are on the broadcast right now and you have any questions as I'm going on, please go ahead, drop that in there. You can also tag someone else's name if you're with us on Facebook, a friend of yours that may benefit from this video. Please go ahead, send that on over to them. That would help us out tremendously. It would help them out tremendously, getting to know some of this information as well. So please go ahead, say hi if you're just joining us. And if you have any questions, I'll continue to check back. That is the news. That is the not. Now, we mentioned the hot, looking at the stock market, the index itself, the S&P 500, but I mentioned that that's not actually what I want to focus on tonight. What I want to focus on for the stock that is hot is, well, that's not it, is really hot. Now, some of you may have heard of this in the news today. I'm not suggesting that any of us out there would have, as short-term traders, had any reason to go and buy this stock today, okay? But there is some things that as traders, we can really learn from what's happening here and take away. First of all, this is 100% a news movement right here, right? That's what's happening here. Now, this stock, this looks like a big candlestick on here. It's made all the other candlesticks look extremely smaller. They just look like just tiny little flat candlesticks in comparison to this monstrous green candlestick from today, topping out at about $52, starting the day, well, I should say closing yesterday at about $10, $10 to $52 in one day. Nobody can tell me that's not hot. 357% increase to the close, not to the high, right? So huge movement here. Company making public information saying that they're partnering with Donald Trump and going to be hosting and launching his new social media platform. Tons of speculation here. Looks like even maybe Wall Street Bets, if you remember that from GameStop a little while ago. Wall Street Bets getting in on this, potentially driving the price up. But here's what I want to show you today. Super, super hot stock. Okay, super, super hot. Definitely need to be careful with something like this in here, because when you get such an incredible price increase, what happens? A lot of people want to take profits. Okay, now I'm not going to guarantee to anybody on this broadcast tonight that this thing's going to move back down significantly tomorrow. There may be some big money moving into this stock, and they really believe that this evaluation is warranted given the news that we got today. But, you know, profit taking is a normal thing to do when a stock moves up this big. So I just want to warn everybody, if you see a candlestick like this, you know, jumping out, I was going to say, what some investors want people like you and I to do is see the big candlestick and go out and immediately throw our money at it. No pattern, no buy point, not looking at a stop out, risk return. We're not using a system to trade. We're just saying, hey, that thing's blasting off. I want to hitch my wagon to that star and see what happens, right? Sometimes that can work for us, but it's not a short-term trading approach that can be consistent over time. And oftentimes what will happen is we get in at or near the highs, because what happens after a big move? Profit taking, right? People who were already in want to take profits and the stock drops. We could get hurt doing that. So we want to have an approach, a system that really helps us navigate that. But it certainly is an interesting and even exciting thing to see. Another thing I want to note today that I think would be helpful for some of you guys, if you were watching this stock, then you may have seen that there were times during the day when you get a literally almost a 400% increase on this stock, that you notice today that they actually paused trading, right? You could not buy and sell. And this may happen at some point in your future, right? This happens when we get extreme volatility on stocks. This happened last year during COVID, when the market was dropping because we closed America down for the lockdowns that we had. We saw that the stock market crashed, and the market, it just closed, right? There were times where we could not buy and sell. So what really happened there? Well, what happened there was there is something in the stock market called breakers, circuit breakers. Now, what happens in a circuit breaker in our house, right? If there's a surge of energy in our house, then the circuit breaker will flip and what? Stop the flow of energy so that nothing gets damaged. That's the whole idea behind a circuit breaker. If we didn't have circuit breakers in our home across the United States, we'd have a whole lot more damage, danger, fires, you name it. So obviously we use circuit breakers there. We also use circuit breakers on the S&P 500 and individual stocks, right, in the market, because sometimes surges come in, buying surges, right, and selling surges, panic selling or manic buying, right? So we have these things in place where you saw this stock today multiple times. Actually, the price got halted, right? Trading got halted. Nobody could buy or sell for 10 minutes. This is something that happens when you see this kind of volatility, and it's a little bit different from the index, the S&P 500 as a whole, to the individual stock. Today, it didn't happen on the S&P 500, but it did happen on this stock. Now, there are some rules to this here that get a little bit more specific than we're going to cover today on Stock Talk, but ultimately from 9:45, okay, this would be in Eastern time, right? So here I mentioned that the market opens at 8:30, so this would be different. 9:45 to 3:35, okay? So almost the whole day, okay? It takes a 5% move for many stocks, 5% or more in that time, and they can slow down trading. They can actually hit a circuit breaker, okay? The last portion of the day, a little bit different, has to be more, in some cases 10%. But if you see these big moves, they'll slow it down, whether it's going up or it's going down. They just slow it down. You might find, I've been in a stock before when a breaker was hit. You go into your brokerage account and it says trading halted, right? You can't do anything until it stops. Now, this is pretty rare, okay? This does not happen very often. During COVID, it happened quite a few times actually, but of course that in and of itself does not happen very often, okay? And that was on the S&P. Now, the S&P can have a drop of 7%, 13%, or 20%, okay? When those happen, there is a trigger. It is a breaker that goes, and trading is halted for a time. Now, it can be triggered and there is a temporary stop, right? It's a temporary stop. It's a level 1 decline, a level 2 decline, a level 3. Remember, I mentioned 7%, 13%, and 20%. So the first one and the second one will actually just stop trading for 15 minutes. Okay, 15 minutes trading is going to stop if you hit those breakers. If you hit a 20%, it's going to be for the rest of the day. The market will just simply close for the day. Okay, this was added in 1989 when we saw a major crash happen in a very short amount of time. They said, hey, we need to protect traders and investors out there. Emotions can sometimes get very high, panic selling, manic buying, and it can drive price beyond what is safe for anybody to use. So they're not too aggressive with these breakers, but they definitely have something in place. And we saw that happen on Digital World Acquisition today, where it stopped. Now, it continued trading. They didn't shut it down for the day. It just multiple times triggered that breaker and it stopped. They were so ferocious in their buying today. This one actually just continued up regardless, okay? But we did see in COVID last year, there were times where we had to halt trading for a time, and you would have noticed that. Happen. I'm just looking at a couple questions here. Well, the stock market shut down like that. Let's see. Will the stock market shut down like that on only a drop or also a surge higher? Okay, that's a good question. When a individual stock, okay, an individual security drops or goes up, it can be stopped. I actually saw in COVID, March, April of last year, the same thing on the S&P 500. Now, the numbers at which they will trigger the breaker are different from a stock to, let's say, the S&P 500. But I saw it actually get halted on the way up as well as the way down. Okay, there was just more panic selling happening at that time where we saw the breaker go off on the downside repeatedly. I only personally recall seeing it on the upside one time. Okay. That is not something that I saw more than that. Okay. So that's a great question. Thank you for asking that. Jeffrey says, howdy, I think has the time for Stock Talk Thursday changed? Well, we start at 4:30 Central. We've been doing it for almost a month now, just about a month now, and trying a new time slot here, letting more of our friends jump on at this time. So good to have you on here, Jeffrey. Sorry if there's any confusion on that. We've been doing it this way for, I think, about a month now. So appreciate that. So that gives us a picture, you guys. What's a couple things? News item. I really only want to pay attention to one or two things. Earnings report. I might have a great pattern, right? Look what I can do in the short term with taking advantage of a pattern versus the buy and hold we looked at. Okay. That's the power of trading. I still want to watch out for that earnings report though. And obviously today in this stock, seeing something massive, but just knowing, there's some things out there that are in place to help regulate our markets to some degree. We don't want over-regulation, but there are some things in place that can actually really help us if we see these kinds of highly emotional speculative events come in and potentially drop a stock, in this case, the stock moving up considerably and being halted several times as a result of that. So this is just good insight for your stock trading. I hope you got a lot out of this session. We are going to be back on Monday, continuing our series, and I will be there. Hopefully you will be there as well. This is Stock Talk Thursday here at Tradeway. If you guys have any questions, anything at all, you can always email us, support@tradeway.com. Let us know what you're thinking, what you need to know. I am happy to answer. You can also post right there on Facebook, and my team will get that, send that on over my way. It could be something we've covered in our episodes, something you've watched on an older episode on YouTube, something maybe a friend is asking you, a security, a stock that you would like to look at next time. Send that on into me, and I will definitely take a look. Appreciate you guys once again. Thanks so much, and we'll see you next time.